Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, Mention and other fine folks, to the Sunday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate through the upside-down, topsy-turvy world we find ourselves in, seeking greener pastures on the other side, hopefully coming out healthier, wealthier, and wiser. Okay, today we're going to take a look at the weekly jobless claims. As you can see, we'll look at how this is affecting savings and retirement for folks. We're going to take a look at junk bonds and where they might be heading, as well as how solar could perhaps bring power to many folks without electricity, which is still an abomination, really, in this day and age. Everyone should have access to electricity. It should be a fundamental right, really. It's probably the most important utility we have, other than, of course, being able to be fed, clothed, and sheltered. Anyway, let's get to it here. CNBC weekly jobless claims fall again in another sign of labor market improvement. Jobless claims totaled 709,000 last week. The Labor Department reported below the 740,000 Wall Street forecast. That represented a decline from the 757,000 total a week ago. Nevertheless, more than 21 million Americans are still collecting benefits, though the total is declining gradually. So I guess so far I've been wrong about this. Still, these are high numbers, so perhaps there is still a slow recovery happening. But I think we're probably going to be looking at perhaps greater difficulties come the new year. But I hate to sound like a bear, because generally I am fairly hopeful and optimistic by nature. But I think the immediate short-term future is just not that hopeful, unfortunately, because there's been too much shenanigans happening and manipulation. So we'll see. But this is somewhat good news, obviously, better than what had happened before. So we'll see if this can continue, probably until the end of the year, as folks try to beef up their employee counts before the holiday shopping season. And after that, who knows? Vanguard says the median 401k withdrawal was $12,000 amid coronavirus. The CARES Act allows 401k and other retirement savers to withdraw up to $100,000 through December via a coronavirus-related distribution. Vanguard investors who took money pulled out a median $12,000 according to company data. About 4.5% of Vanguard investors took a distribution. Now that doesn't seem like a lot, but then you have to understand that folks who have been hurt primarily by this pandemic have been those in the sort of lower 50%, certainly, of the income quintiles, if you will. And those folks certainly are struggling with money and income issues, and they generally don't have assets. So folks who have assets are usually in the top 20, top 40%. So, they're the ones that have generally not seen their jobs being as decimated as others. Nevertheless, this still goes to show you how deeply and how widely this depression has hit everyone. Now, of course, still focusing on retirees. Many retirees are buried in debt. How can they get out? Credit cards are a big source of debt-related financial stress for older Americans. And of course, older Americans mostly are on fixed incomes, Social Security, and perhaps modest savings at best, except for perhaps the top 10% of folks. It's easy to assume retirees have built a nest egg and paid off their homes. So the last thing they need to worry about is debt, if only. The total debt burden for Americans over age 70 increased 543% from 1999 to 2019. To $1.1 trillion, according to the Federal Reserve Bank of New York. For those in their 60s, debt grew 471% to $2.14 trillion. And folks, this is why I continue to stress at the end of my videos to pay down debt, squirrel away savings, because we have to try and take care of ourselves, develop a future that is where we're healthier, wealthier, and wiser. Being healthier, of course, helps for medical expenses. Being wealthier just generally helps with your living expenses. And wiser, of course, comes from making the good decisions when you still can. For older people, mental health issues add another layer of concern. A debt-laden retirement leaves a dark cloud of anxiety hanging over daily life. And I'm sure that is the case. And if you can hear that noise in the background, unfortunately, I do apologize about that. It's a coffee pot brewing, making quite a racket. Perhaps you can't hear it, hopefully not. And from Mish Talk, of course, we visited before. Expect the junk bond bubble to burst first. Record low junk bond yield, which is really quite appalling. You can see it's at the lowest level here, 4.56% since 2014. US junk rated corporate debt broke record low last set in 2014. And of course, this is a bubble, really. When yields on bonds head lower, that means the price of the bonds are expensive. And that's the inverse of stocks, of course. When the yield on stocks, the dividend yield, is lower. Then, of course, stocks are also more expensive, I should say, rather. But generally, the lower the yield, it's perhaps, it took me a while to understand this, but it's sort of the converse of what you would expect. The lower the yield, the more expensive bonds are, which suggests they're in a bubble territory. When will the stock market bubble burst? I don't know, nor does anyone else, but I suspect the junk bond market is likely to go first. Here's Bloomberg reports. The average yield for the Bloomberg Barclays U.S. Corporate High Yield Index plummeted to 4.56%, sinking below the previous record of 4.83% set in June 2014. The 45 basis point decline from Friday's close was the steepest fall since April the 9th, when the Federal Reserve expanded its corporate bond purchases to include some junk debt. Investors are still pouring money back into retail funds that buy junk-rated debt, with an estimated inflow of $3.23 billion by Friday's close. JP Morgan Chase and company analysts wrote in a note citing Refinitiv Lipper, the cash influx was led by HYG, the biggest high-yield exchange-traded fund, with net incoming cash of almost $1.9 billion. JNK, which is appropriate, right? Junk, the second biggest ETF, raked in $511 million. And here you can see some charts if you'd like to read it. Vaccine news is hopeful, but long-term cash flows haven't suddenly jumped beyond where they were pre-SARS-CoV-2. This is easily the worst passive investment menu in U.S. history, for sure. Couldn't agree more with that. Folks seem to be, choosing the wrong flights, assets for their flights of safety. Solar could provide a lifeline for the world's most vulnerable economies, and this is something that, of course, we take for granted here, electricity. But, of course, it's important, obviously, for not only a functioning democracy, but really a functioning economy, to have a widely available and relatively cheap electricity, which we enjoy mostly in the Western world. Around 13%, or approximately 940 million of the world's poorest people, live without any electricity. In Africa alone, 600 million people live without this luxury. Lack of access to electricity can lead to significant challenges and setbacks for those living in conditions that don't allow them to do homework or keep their businesses open after the sun goes down. 600 million people in Africa, that's almost double the American population. 940 million people total is almost the population of China. I mean, that's appalling. And I'm glad there's people talking about it and trying to figure out solutions, because obviously it's not just as easy. A lot of these folks are living in rural areas where it's challenging to get cables out there, of course. So I think solar offers a big help. It can be locally managed. And of course, it's getting cheaper and cheaper all the time, as it says here. For displaced people, these limitations come on top of a variety of other hardships, from property loss to physical violence and persecution, the World Economic Forum reported this month. In short, access to energy is a vital economic lifeline. As I've said, it should actually just be a human right generally. Luckily, the most promising solution for bringing electricity to the 940 million people around the world currently living without it also happens to be one of the most climate-friendly options: solar power. The arguments for scaling up access to solar power are compelling, reports the World Economic Forum. First, solar is increasingly affordable. Costs have fallen 5 times in the past decade, and more viable for poor communities than the current alternative: unhealthy and polluting diesel generators, which are expensive to operate and add to carbon emissions. So at least folks are talking about it, and hopefully that's coming soon, where it'll be as ubiquitous, hopefully, as air. Okay, so here are the markets looking a bit mixed, and down a little bit. The S&P 500 down 20 basis points, or 0.2%. NASDAQ up 36 basis points, or 0.036%. The Dow Jones down 0.37%, or 37 basis points. And the Russell 2000 down 58 basis points, or 0.58%. It's a bit of a mixed day. I'm wondering if the stock market is struggling to take over its last highs. This could be perhaps a flattening of it before we start sort of gently rolling down a hill again in correction territory, but who knows. I'm expecting, usually there's a Santa Claus rally at the end of the year, so perhaps we will see that. There's also some expectation that S&P could see 4,500 by the time it reaches all-time peak before we start hitting the meltdown, but we'll see what happens. Here's gold bouncing around the 1880. Nothing much to see here. It's just continuing to consolidate. And as you'd expect, much the same with silver at around $24. So still consolidating. I think these are probably good prices to buy. I'm not buying currently at the moment, but I think they're not bad prices to buy. I could see, as I've said before, triple-digit silver prices perhaps in the next several years, potentially, depending on how this catastrophe unravels. Here we have the cryptocurrency coin market cap, 2.2% up over the past 24 hours. It's on a roll. It seems to be continuing to have vastly more green days than red days. $465 billion market cap and 6,029 coins for you to ignore. BTC dominance now up at 64% again. You can see in the top 10 here, Bitcoin the only one that's up past 24 hours. I think Ethereum will do well as well, but goes to show you, I think there will be very few winners by the end of the decade once this becomes ubiquitous, and potentially most of these other altcoins will become vaporware. So I thought we'd ask the online oracle, our trusty sidekick, the 8-ball economist, if silver would be worth over $100 an ounce by 2025. As you know, I expect triple-digit value silver within the next several years, and perhaps potentially by 2025 as well. And of course, silver's just been consolidating for the last few months here after sort of modest run-up, I would consider it, considering the situation we're in. But anyway, this is the question for the online oracle. Will silver be worth over $100 an ounce by 2025? Without a doubt. Okay, there you go. So the 8-ball economist seems to agree with me, but of course that remains to be seen. However, 5 years is still a long time away. So thanks so much for joining me, folks. Hope you're doing well, and I appreciate you spending the time here. Remember to stay healthy, drink lots of water, eat your veggies, pay down debt, screw away some savings, and be kind and compassionate out there. And remember to take care of yourself, especially under the current circumstances where the pandemic continues to rage. And above all else, don't spero, spero.